EMI schemes are a great way to incentivize your employees, and in this video, we'll explain everything that you need to know about them. Hi there, Nicholas Campion here from First Formations, the UK's leading company formation agent. Enterprise Management Incentive, or EMI schemes, are government-backed share option schemes for employees. They allow small, private companies to offer their staff equity in the business and are a great option for businesses looking to grow, retain and incentivize their teams. In this video, we'll explain what these schemes are, how they work and how to set them up. So let's get started with the basics. What exactly are EMI schemes and how do they work? EMI schemes are generally the most tax-advantaged way for qualifying companies to give employees an option to purchase shares in the company at a later date. They are backed by the UK government and are specifically designed for high-growth small businesses and startups. Companies use them to help attract top talent, promote staff loyalty, and expand rapidly, all without a significant cash outlay. Employees don't have to buy the shares, but if they do, they can purchase them at today's price, that is the date when the options are granted, even if the value of the shares has increased by the time they are bought. This is because when EMI share options are granted, an exercise price is set. This is the price to be paid for the shares when they are purchased. To be tax efficient, this exercise price must not be less than the actual market value of the shares at the time the options are granted. The market value must be agreed upon with HMRC, with options then issued within 120 days of this agreed valuation. Subject to the overall company cap of £3 million, you may grant each qualifying employee EMI share options worth up to a total unrestricted market value of £250,000. Where the full £250,000 worth of options has been granted, the employee cannot be granted any further EMI options until 3 years have passed from the date of the last of the options were granted. So, what is in it for the company? As well as being a cash-efficient way to bring in and retain top talent when the company is starting out and needs to conserve cash, as opposed to paying extreme high salaries or awarding top bonuses, there are also tax benefits that the company can take advantage of. There is potential for corporation tax relief when the shares are acquired by the employee upon the exercise of the options. There is also an opportunity for the company to elect to pass on the payment of any employer's national insurance contributions to the employee who is granted the options. EMI schemes are typically used to incentivize employee loyalty, thereby reducing turnover and recruitment costs for the company. This is most commonly observed using two mechanisms. The first is drafting the rules of the EMI scheme so that the options can only be exercised after a certain period or when there has been an exit, such as the company being sold or undertaking an initial public offering. And the second is using time-based vesting, where employees must earn the right to the option by staying at the company. For example, an employee might not be entitled to any options in their first year, but after the first year they start to accrue monthly. Additionally, EMI options can only be exercised by current employees or those who were employees as long as they exercise the options within 90 days of them leaving the company. Overall, this incentivizes employees to stay at the company because if they leave, they must exercise their options and purchase the shares within this period to benefit from the tax advantages of an EMI scheme. There are significant numbers of other more general benefits to setting up an EMI scheme, and we'll come back to this later in the video. So, let's take a closer look at taxation on EMI schemes. There is no tax payable on the grant of an EMI option to an employee. If the EMI options are granted with an exercise price of at least equal to the actual market value of the shares at the date of the grant, then the employee will pay no income tax or national insurance contributions when the option is exercised. As long as the shares have been held for at least 2 years, employees may be entitled to business asset disposal relief when they sell the shares that they have purchased by exercising the option. This means that they pay a reduced capital gains tax of 10% when they sell their shares, as opposed to the standard 20%. The employers may also benefit from corporation tax relief when the options are exercised. The relief matches the difference between the actual market value and the date that the shares are exercised and the amount the employee pays for them. Bear in mind that all tax benefits are subject to individual circumstances and EMI qualifying conditions, which we will cover next. So, what does it take to qualify for an EMI scheme? Both the company itself and the employee who is receiving the options need to meet certain conditions. Let's look at those company conditions first. To be a qualifying company for EMI purposes, HMRC sets out the following criteria for companies. The first is independence. Your company must not be controlled or owned by another company. In other words, another company must not own more than 50% of its shares. The second is qualifying subsidiaries. If your company has one or more subsidiaries, they must all be qualifying companies for the company that intends to grant the EMI options to be eligible. This means your company must own more than 50% of each subsidiary, and all companies must carry out a qualifying trade. There must also be no provisions in place that could result in another person or corporate entity taking control of the company subject to the Enterprise Management Incentive Scheme. The third qualifying criteria is gross assets. The gross value of your company's assets must not exceed £30 million on the date the EMI option is granted. If you have subsidiaries, this is a total limit that applies to the whole group. The fourth qualifying criteria is the number of employees. You must employ no more than 250 full-time equivalent employees to qualify for an Enterprise Management Incentive Scheme. A full-time employee works at least 35 hours in a standard 5-day working week, excluding lunch breaks and overtime. If you have subsidiaries, again, this limit applies to the group as a whole. The only exclusions that apply to this part of the criteria are students on vocational training and staff members who are on parental leave when the EMI options are granted. The fifth criteria is excluded trading activities. Your company must not operate substantially in an excluded industry. These industries include banking, farming, legal or accountancy, property development, and shipbuilding services. You can find the full list of excluded trading activities in the description below. There are no set rules to what is regarded as substantial, although this is generally perceived to be around 20% of the group's trade. Then there is fixed UK establishment. Your company must be based in the UK and have a fixed place of business, such as an office, workshop or factory where it carries out its activities, or has an agent who habitually acts on the company's behalf. The last qualifying condition is the maximum EMI limit. A company can have up to a maximum of £3 million worth of unexercised EMI share options at any one time. The unrestricted market value is used to calculate this, and along with the actual market value, which will be agreed with HMRC at the outset. Any options granted over this limit must not attract Enterprise Management Incentive Scheme tax relief. It's important to note that this is a brief introduction, and in practice, the requirements can become complex to navigate. If you're unsure if your business qualifies to put an Enterprise Management Incentive Scheme in place, you can submit an advance assurance application to HMRC. In this, HMRC will review your company information and let you know if you are eligible. More information on how to make this application can be found in the description below. So that's the company's qualifying conditions. What about employees? The qualifying criteria that employees must meet to be eligible for EMI options is as follows. They must be legally employed by your company or a qualifying subsidiary. They must be a UK tax resident. They must work at least 25 hours a week or spend 75% of their working time at the company. They must not hold or be entitled to more than 30% of company shares, known as a material interest, and the total value of all CSOP and EMI options held by the employee must not exceed £250,000. Now, in addition to concerning yourself with the qualifying conditions, you also need to be aware of so-called disqualifying events. A disqualifying event is an event that disqualifies an option from EMI tax relief. This includes circumstances such as an employee leaving their employment, certain changes to the terms of the option, or the company becoming substantially involved in an excluded trade. A full list of excluded activities is available again in the description below. If a disqualifying event occurs, both the company and the employee will still be entitled to EMI tax advantages, provided that the options are exercised within 90 days of the disqualifying event. So that's the background to EMI schemes. How then do we go about setting this scheme up? The first step is gaining approval from the board of directors and any relevant shareholders or governing bodies to put in place your employee share option pool. This means checking your articles of association and any shareholder agreement that might be in place to see if there are any restrictions on doing so and if any special consents are required. Next, you will need to apply for an EMI valuation with HMRC, which includes submitting the VAL 231 form. This will set the actual market value and unrestricted market value of each share, which you will then use to set the exercise price of the options and calculate whether you have surpassed the maximum company or individual option limits. Your valuation is valid for 90 days from the date of the agreement letter from HMRC. Whilst waiting for your valuation to be agreed by HMRC, you can begin drafting the EMI scheme documentation, which will include the scheme's rules and individual option agreements. All relevant parties, including the board of directors and potentially shareholders and others, will need to approve the setting up of the scheme. The grants in general, the scheme documents themselves, which will set out how the scheme will work, the number of share options being granted to each employee, and any restrictions or special conditions relevant to the options, such as time or performance-based vesting. After receiving the required approval, and once you have received agreement of the EMI valuation from HMRC, you can grant EMI options to employees by entering into individual option agreements. The final step is to tell HMRC about your EMI scheme and register the EMI options. If the options were granted before the 6th of April 2024, you must notify HMRC within 92 days of the grant. For any options granted on or after the 6th of April 2024, you'll need to notify HMRC by the 6th of July following the end of the tax year in which the grant was made. For example, if the option was granted on the 8th of April 2024, you'd have until the 6th of July 2025 to tell HMRC about the EMI grant. If you fail to meet these deadlines, you and your employees may lose your EMI tax benefits. Bear in mind the registration process can be lengthy as you need to complete the option details for each employee. So be sure to allocate plenty of time for these administrative steps to avoid any delays. Looking further ahead, you'll also need to manage your EMI scheme. For example, when employees exercise their share options, or if you want to add or remove recipients, you will need to update your records. You must keep your records up to date, as you'll need to submit an annual ERS return to HMRC to inform them of the status of the scheme and the options, even if there have been no changes made. This, along with the setup process, can be very time-consuming for a busy business owner, particularly as the devil is in the detail. For this reason, we do highly recommend assigning these tasks to senior members of your financial or legal teams. If you're short on resources, it is worth speaking to a corporate lawyer and tax advisor who can help you set up compliant enterprise management incentives. So, what exactly are the benefits of setting up an EMI scheme? We touched on this briefly earlier, but there are a large number of advantages that small businesses can enjoy by setting up an EMI scheme. These include the following. Tax benefits. As mentioned earlier, employers and employees can enjoy significant tax benefits. Attracting new talent. It will really help you to stand out to new recruits by offering employees a share of ownership in the company. A cash-free alternative. The initial cash outlay in setting up a scheme will be much less than having to pay out large salaries and bonuses. Retention of staff. EMI schemes are typically used to incentivize employees to stay loyal to the company. With the right EMI scheme, you can retain talented staff to keep driving your business forward and avoid having to spend time and money on replacing team members. Rewarding employees. EMI schemes are an excellent way to reward hard workers and share your company's success with them. Improved productivity. Employees are likely to be more productive when they have a potential portion of company ownership. This helps to align their goals and values with the company's. Higher engagement. Staff are not only more productive, but more engaged with the business when they have a personal interest in it. And flexibility. You have a lot of freedom to design the EMI scheme in a manner that's right for you, your business, and your staff. So there you have it. We hope this video has provided you with a clear understanding of how EMI schemes work and how they can benefit your business. Enterprise management incentive schemes are a tax-efficient way to give your team the option to purchase a share of the company. They can be used to provide compelling incentives for employees and to retain top talent. The process can be quite complex and time-consuming for business owners, so use our guide to learn everything you need to know about taxation, registration with HMRC, and the considerable benefits of granting EMI options to your employees. If you have any questions, feel free to leave them in the comments section below and we will get straight back to you. Don't forget to check the useful links in the description for more information on EMI schemes. Finally, be sure to subscribe to our channel for more business tips and advice. Until next time, cheerio.